Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, don't fight it, don't chase it. That's the call today from one well-known market voice. We discuss and debate it with the investment committee. Joining me for the hour today, Joe Terranova, Stephanie Link, Sarat Sethi, and Bryn Talkington. We will go to the markets here as we watch the first trading day of a new week, and we're modestly green. The dust now settling from the rate cut, which leaves us, Joe, where? Goldman Sachs' David Kostin today raising his 12-month S&P target, raised a few of them, but the 12-month target is now 7,200. It is Goldman's Tony Pasquarello who makes the call I referenced at the top of the show today, too. Don't fight it, don't chase it. Do I love the positioning setup and tactical risk reward? I don't. With that, do I think you should be stepping in front of the U.S. mega cap tech freight train? I don't. It's a bull market. The primary trend is higher. I feel like this matches with the Tepper view. Joe from Squawk last week. Don't really love the valuations that we're trading, but I'm not going to stand in front of this market. Not with this Fed. Not with fighting the Fed.
Fully agree. And that's exactly, I think, the disposition that most people have towards the market right now. It's interesting because he says, don't chase it. Well, if you're already well positioned, if you're long like we all are the market, you're going to see that the work is going to be done for you as the calendar approaches the end of the year from a lot of people that are forced to chase it. They're forced to chase it because they might be underperforming year to date. So I do believe that chase for performance ultimately is going to happen. It's difficult to find opportunities. We'll talk about a couple on Thursday. I gave the XBI as a final trade. That looks like that's breaking out. And then I think if you look at the Mag 7, there's only two Mag 7 names that have not made an all-time high in 2025. That would be Tesla and Apple. Well, guess what they're doing right now? They're going back towards those highs that they traced out earlier in December. So I think there's some opportunity, very strong momentum in those two names right now.
I mean, the XBI is up 2% since the rate cut. We're talking really only two full trading days, last Thursday and Friday, as we know. What about this, Steph, from Pasquarello? Don't fight it, don't chase it. Yeah, I mean, I don't think the best investors in the world, they look at the market, they see the valuation, they're like, I don't really love it. But, man, this AI theme is powerful, and the Fed's cutting, so I'm not an idiot. Like, I've seen what happens before. I've seen this movie before, right? Maybe a few times before. I'm not going to get in front of that.
Well, the Fed is cutting into a strong economy, so that's actually very powerful. I will say, yes, the market is expensive, but you're going to see double-digit earnings growth, free cash flow growth of 14% year over year. Companies are buying back a ton of stock, and you have margin expansion. So I actually think we're probably just going to sort around here for a couple of weeks until earnings season, and on the 14th of October, that's when it all starts again, earnings season with the big banks. And I went back and I added up all the buyback news from the banks, the big six. They still have 192 billion left to buy back stock.
I mean, that's
powerful.
That earnings are that close.
I know.
Feels like the earnings season kind of just ended. Now, here we are in October. We're gonna be doing it all over again. By the way, since you mentioned buybacks, it's a great setup for if you consider what are the next legs of this rally, where does it potentially come from? Well, JP Morgan notes buybacks, which Steph was just talking about. S&P companies have announced buybacks at an unprecedented rate. Close to 960 billion committed year to date, significantly surpassing the 3-year average of 644 billion. 960 committed year to date. 3-year average, 644. That doesn't give you an idea. Your financials, Charles Schwab, Bank of America, Morgan Stanley, and JP Morgan have all announced buybacks.
Well, and Uber is going to buy back $20 billion, and that's 9.5% of its float. I mean, so this is really material. I think that the banks are going to hit off the earnings season really powerfully. I think they're going to be very, very strong. And then we get into that, what I call silly season. So, yeah, you don't have to chase. Silly season is when a company reports good numbers and the stocks fall. And numbers are still going higher. That's your opportunity. So that's what I would say. Wait until earnings season. I do think, by the way, the $7 trillion of cash in money markets will come, not all, but some of it will come and will be a tailwind as interest rates come down, because you're not getting 5% on your money markets
Let's
anymore.
debate that, Sarat, because that's been a key point from some. That look at all this money that's still on the sidelines, going to come into the market now because the Fed is going to do its thing, and that's going to be good for the market as well. Maybe not. Wall Street Journal today says investors are flush with cash, excuse me, and happy to keep it there. Assets in money market funds reached a record $7.7 trillion last week. Pardon. Surat, take it away. Can't you see?
So let me take it from you while you get your water there. So I think Steph's absolutely right here. So what's going to happen is rates start coming down. Investors are going to say, wait, my 3, 4, 5% money markets, I'm not really going to get. So at that point, what am I going to do? I'm going to put money back into the market, and I'm going to look for opportunities, because even fixed income today, spreads are the tightest that they've ever been. So you're not going to be chasing that. So you're going to go back into equities. And the equity point that we were talking about, you have two things going on. You have a put basically with the Fed, because if things start slowing down, they're going to cut rates faster, and buybacks are going to accelerate. So that's going to also help the equity market. So I think you've got three positive things going into whether you get good or bad news.
I want to push back a little just on the premise that the cash coming into the market is such a big catalyst. It seems as though that cash has been sitting on the sidelines since the great financial crisis. Maybe there's so much cash in existence because the world is just getting wealthier. So I really think it's about what Steph mentioned before. I think it's the profit margin expansion, because the profit margin expansion is the solution to offsetting the tariffs. The profit margin expansion allows you to buy back your stock. And I think as long as that profit margin growth is there, where we went from 12.25% to 13.5%, as long as that's present for the S&P 500, then I think for sure we are in a really good position. And I don't think you need that quote-unquote cash coming in from the sidelines.
I think it's nice to have, though.
What if people...
It's nice to have, but I think people keep making that argument. And I don't think you should sit there saying to yourself, okay, I'm going to rely on the cash coming in from the sidelines.
3 years ago, you didn't get 5% on the money market. Now you're getting 5%, and now it's going to come down gradually if the Fed continues to do what they're doing.
By the way, rates are up since the rate cut.
They are. 3.98 for a 10-year on Wednesday.
Yeah, I know.
Still up.
The 30-year fixed mortgage is down 100 basis points from January.
Then tell me why the home builders are down 1.5% since the rate cut.
Because they were up 30% from the second quarter earnings report.
So it was all pull forward?
I think a little bit of it was a pull forward, and they can take a breather, but they are still extremely cheap. We haven't had a housing cycle, and we're still growing the economy at 2.5%, 3%. Imagine when we get a housing cycle.
I mean, Bryn, this idea of money. Maybe money coming in. Maybe people aren't convinced the economy is as strong as Steph wants everybody to believe. Maybe they look at the market valuation. They're like, I don't know. Stocks look expensive to me. As part of this article, a little tear from it from the Journal today. With stocks by some measures now more expensive than ever, some investors are willing to wait for discounts. And it may take more than 1 or 2 or 3 rate cuts to change their minds. It is indeed a wall of cash because it ain't going anywhere. That's according to the president of the data company that came out with this $7.7 trillion last week. Bryn, forgive me. You hold your thought because we do have breaking news. It's regarding Nvidia. We'll get to John Fort now, who can fill us in with more. John, what do we know?
Scott Wapner, thank you. I am here at Nvidia headquarters in Santa Clara with the CEO of the world's most valuable company and the CEO and president of the world's most valuable private company, Jensen Huang of Nvidia, Sam Altman, and Greg Brockman of OpenAI. So let's dive right in to the news. Jensen, Nvidia is making a $100 billion investment in OpenAI and working together to build out, I think you're saying, 10 gigawatts of capacity over several years. The investment's going to come with the gigawatts, one at a time. You're telling me, you guys, as quickly as you guys can get it done. Jensen, first of all, set the stage. Why?
This is the biggest AI infrastructure project in history. This is the largest computing project in history. Well, the reason for that is because computing demand is going through the roof for OpenAI. You know, ChatGPT is the single most revolutionary AI project in history. It's being used everywhere, every industry, every country. Every person practically that I know uses ChatGPT. The computing demand is going through the roof. And so this partnership is about building an AI infrastructure that enables AI to go from the labs into the world. This is about the AI industrial revolution arriving. Yeah. It's a very big deal.
$100 billion, a lot of money. Sam, Greg, you guys are used to dealing with a lot of money in big projects. So Sam, I think it was just 8 months and a day ago, the initial Stargate announcement talking about the overall move that OpenAI is making in building out this capacity. Where does this fit?
So as Jensen said, building this infrastructure is critical to everything we want to do. Without doing this, we cannot deliver the services people want. We can't keep making better models. And now that we really see what's on the near-term horizon of how good the models are getting, the new use cases that are being enabled, what people want to do, this is like the fuel that we need to drive improvement, to drive better models, to drive revenue, everything. So this is helping us get to a world, along with our partners at Stargate, Microsoft, Oracle, where we can build out increasing amounts of infrastructure to deliver on what the world is demanding out of these services. There's like no partner but Nvidia that could do this at this kind of scale, at this kind of speed. It's really like quite incredible. But this will expand on the Stargate ambitions and let us push further and further. We have found every step along the way that we did not quite set our sights big enough, given the market demand. So this will help us push towards that next level. The compute constraints that the whole industry has been, and our company in particular, have been terrible. We're so limited right now in the services we can offer. There's so much more demand than what we can do. And as we look forward another year or 2 years, if you have, let's say it takes 10 gigawatts of compute or 5 gigawatts of compute, you could choose one of two things. You could choose to cure cancer by having AI do a bunch of research, or you could choose to offer free education to everybody on Earth. No one wants to make that choice. And so increasingly as we see this, the answer is just much more capacity so that we can serve the massive needs and opportunity with this.
Greg, one way of measuring that demand is the number of users that OpenAI has. ChatGPT says somewhere between 700 and 800 million. How quickly are you growing? What's the technology that you guys need to bring to bear, from NVIDIA included, in order to satisfy that?
Yeah, so 700 million, growing extremely quickly. Like, I think that ChatGPT has grown from nothing to that scale, and it continues to grow faster than any product in history. And really, the reason we were able to make this breakthrough and serve it to the extent that we have is by leveraging NVIDIA's platform. Like, we've worked together very closely since Jensen actually hand-delivered a server to us back in 2016. And we were just doing some math earlier. I think that this deal is really for like 1 billion times more computational power than that initial server. And so we're able to actually create new breakthroughs, new models, to be able to actually solve problems like create cures for diseases, and to actually be able to empower every individual in business, because we'll be able to reach the next level of scale.
Jensen, step back for me. I mean, a few days, you're all over the place, literally. I mean, you're in the UK, I saw the white bow tie and all that, the tux.
You look very nice.
Yeah, you're here, it's very nice. But you're also doing a lot of investments. The Intel investment announced last week, quite a bit smaller than this one, but seems significant also because it's weaving NVIDIA technology in the PC and data center level in a way that perhaps it wasn't before. Where do these kinds of investments fit in? How do you think about the value of the ecosystem to NVIDIA?
The Intel partnership is about recognizing that accelerated computing and AI's day has arrived. Remember, general purpose computing was invented practically 60 years ago. And for the last 60 years, we've been following that basic blueprint, that basic architecture, to build the ecosystem, the computing ecosystem of the world. And so all of a sudden, accelerated computing's time has come, and we're fusing, if you will, the Intel architecture with the NVIDIA architecture to bring them into the world of accelerated computing and AI. So that's what that partnership's about. This partnership, I mean, this is, monumental in size. There's never been an engineering project, a technical project of this complexity and this scale ever. And it really just says that AI was in the early adopter phase in the labs, and finally it's breaking out into just about every single industry, every single use case we can imagine. It is very soon where every single word, every single interaction, every single image, video that we experience on, through computers will somehow have been reasoned through or referenced by or generated by AI. It's going to be touched by AI somehow. So all of our computing experiences throughout the day, everywhere, in every industry, will be powered by AI. This is the first 10 gigawatts. It sounds like an enormous undertaking, but there's no question that AI is transformational for every industry. But the important thing is the AI infrastructure will be everywhere, and it will power computing experiences for everyone every day, and it's going to be just everywhere.
Sam, it seems like the two most valuable companies in the world, Nvidia at number one, over $4 trillion, about $4.25 trillion last time I checked today, Microsoft just under $4 trillion, are going to be major investors in OpenAI. How should we understand the governance, the influence that these companies have over OpenAI, where those lines are, and even, the investment size-wise, where that's going to net out?
We're thrilled to have them both as partners. They're passive investors. Our nonprofit and board are in control, but the ecosystem is really important to us. Nvidia and Microsoft are two of our most critical partners and have been from the very beginning. And having them so aligned with our success is, I think, great for us. Hopefully, great for them too.
Greg, where does Nvidia fit along with all of the other infrastructure providers? Oracle, you guys kind of touched Oracle and the stock went up, even though the name wasn't attached to it. When they reported earnings and their guidance, a lot of people were looking over at OpenAI. Where do these different technology infrastructure players fit in terms of importance in the amount of capacity that you need?
Well, look, the project that we're trying to do is something that, as Jensen was saying, is bigger than any infrastructure build-out that's ever been done. It's much larger than the Apollo program, for example. And so we're going as big as we can with the biggest partners in the world. Nvidia is a core strategic partner for our build-out. There's just no one who could build as fast or as big as they are going to be able to accelerate us to be able to do. We are working together with Oracle to do a lot of the infrastructure builds with SoftBank and Stargate to be able to actually do a bunch of that work as well. We're starting to expand into just trying to figure out every single way that we can actually get this compute to the world. But there's really been no partner like Jensen, like Nvidia, and it's just been a very, very special partnership for more than a decade now, and we're moving into a next phase together.
One of the things that's really important to say is that, and Sam and Greg hinted at it, this is additive. This project, 10 gigawatts of AI infrastructure, is additive to everything that has been announced and contracted. Remember, they've contracted huge amounts of capacity through Azure, through OCI, through CoreWeave. And all of that is powered by NVIDIA, and we're really delighted working with all of these partners. And that's going to continue to grow. This is additive, incremental on top of that, which is kind of puts it in perspective, the scale of AI computing that's needed for the world. The demand is just exponential.
To say anything different from what's already been included in the financials that you've given or the guidance that you've given. But this is an announcement that's breaking right here on CNBC. Has this been factored in to the numbers that you've given Wall Street up to this point?
This is additive to everything that we've spoken about so far. It's pretty incredible.
We're also talking about AI infrastructure for the world. One of the headlines last week had to do with China and how they're dealing or not dealing with NVIDIA. When you look at where this capacity is getting built out and the global use that it's going to have, how do you think about the way different regions, the way different countries are going to tap into that, and how that affects NVIDIA's competitiveness?
Well, President Trump was clear about this, and you've heard me say this before, that we want the world to be built on the American tech stack. And the American tech stack, the AI computing stack, includes chips, infrastructure, models, and applications. We have every reason to believe that the United States should lead in every single one of those layers. And in doing so, we want the world to be built on top of American chips, we want American infrastructure, American models, and for the world to integrate with American applications. And we had to diffuse this capability as fast as possible because the world is racing to bring AI out to the world. And so I think the need to build AI infrastructure all around the world, this is just beginning. Notice most of the infrastructure conversations we've been having are largely located in the United States. But we're going to see AI infrastructure built in Europe and in the southern parts of the world. You're going to be Southeast Asia. All over the world, we're going to be building AI infrastructure.
Sam, there was a DeepSeek moment several months ago. The market kind of freaked out about what this means for infrastructure, for capacity, for expense. What was the legacy of that? Given the moment that we're in right now, this $100 billion investment NVIDIA is making in you, clearly you see value in these chips, or you wouldn't need that kind of money for that kind of equipment. What does that mean? How has the way the conversation around AI and models has shifted affected the way that you guys are looking at the build-out?
Two thoughts about this. First of all, I think most of the world still thinks of AI as what ChatGPT can do. You know, it's a better version of web search, or it helps me, you know, with some small tasks here and there. AI has moved an incredible distance. AI is now outperforming humans at the most difficult intellectual competitions we have. For the first time with GPT-5, you're starting to see scientists saying AI is like making novel discoveries, small ones, but real ones. And so there's this, I think there's this huge mismatch in the world of what most people think AI can do and what the frontier of AI can do. And so when DeepSeek came out, I think people had this like brief freak out. I think maybe your stock went like way down in one day, and people were just like, oh, this is like the end. People really want to predict the end of the compute scaling somehow. And then it turned out that people need a lot of AI, and they need a lot of the frontier AI. And so it is totally true that the cost per unit of intelligence will keep falling and falling and falling. And we think that's great. And we'll be able to offer services like ChatGPT, more of it, cheaper, the whole thing. But on the other side, the frontier of AI, the maximum intellectual capability, is going up and up. And that enables more and more use, and a lot of it. So there's this huge overhang that the world, I think, does not yet grasp of where the models already are today. And when you throw a lot of inference compute at them, what they can do for you, that is totally different than ChatGPT or generating an image or whatever. And so I think that was really missed in the DeepSeek moment, and why we want to do this. It's that the models are at this point like actually quite capable for things far beyond what most people use them for in ChatGPT, and the world is just catching up with that. Second thing, you know, we throw around these numbers, 10 gigawatts, 100 billion, and there's a few syllables here and there. We're all, you know, it's like a Monday morning. We're all kind of like low energy. We got a lot of stuff we got to go do, and stressed about the day ahead. But
we've already had a pretty long day.
We had to have a long day. But the magnitude.
This deal, yeah, I mean, but I flew out here not knowing exactly who I was talking to, and this came together. So yeah, thank you. But
for sure, thanks for taking a flyer on that. But the magnitude of the scale of this project, you know, 100 billion is a small dent in it. And the numbers are also like, they're missing the story of what this amount of infrastructure is capable of doing. Like 10 gigawatts of compute, again, easy to throw around numbers like that. But the amount of work it takes to build that out, the size and scale of these like, you know, multi-square mile gigantic things, and the complexity at every level of the supply chain, and then what that amount of brain power, which does not exist today, can do already today. What it will do is the models get better. Like, this is the real deal. This is the thing people have been waiting for. You know, they talk about AI or when it's going to do this and when it's going to do that. Like, the stuff that will come out of this super brain will be remarkable in a way I think we don't really know how to think about yet.
100 billion is a small dent. Now you sound like President Trump. And
one way to contextualize the scale of what we're talking about and the compute scarcity of the world that we're heading towards.
Yeah.
You know, ChatGPT today, you talk to it, it gives you answers. But clearly you want an agent that's going to go do work for you proactively while you're asleep, be able to organize your calendar or go, you know, try to work on projects for you.
Sure.
And so you really want every person to be able to have their own dedicated GPU. Right, so you're talking order of 10 billion GPUs we're going to need. This deal we're talking about, it's for millions of GPUs. Like, we're still 3 orders of magnitude off of where we need to be. So we're doing our best to provide compute availability, but we're heading to this world where the whole economy is powered by compute, and it's going to be a compute scarce one.
So Sam,
you know, John, remember, this new project that we're talking about, 10 gigawatts, or roughly 4 million, 5 million GPUs. That's approximately, in one project, what we shipped all year this year, okay? And twice as much as last year, twice as much as the year before that. And so that kind of puts it in perspective. This is a giant project.
And we don't yet know how many years to amortize that over, sort of, but it's...
Well, we just need OpenAI's, OpenAI is the fastest growing software company in history.
So about the infrastructure, we were talking about data centers, but I also want to talk to you about the edge. And I guess Sam or Greg, this could be either of you. Apple had their big launch of selling iPhones last week. A lot of people thought, oh, they're behind on AI. They're trying to push this idea that these phones, because the chips they have in them, are AI ready. And of course, they're talking to you guys. Are these part of the infrastructure that you need. What should the world understand about the role of the edge and of
Totally.
devices like this?
This is where there's this important idea, which is most of the world thinks about AI as ChatGPT, and yet AI capability has moved far beyond. So for the kind of chat with ChatGPT about most stuff, you will be able to do a lot of that on your phone, and we think that's great. We released an open source model called GPT-OSS recently that can run on a laptop or a phone, and it's incredible to me what you can do on a device. It's gone way further than I thought, and we'd love to see a lot of that move to the edge. Curing cancer, like an AI that thinks really hard and cures cancer, that'll need the big data center. But for the sort of standard ChatGPT queries, we hope we can push a lot of that to the edge.
So what's the significance of these platforms, whether it's from Apple, whether it's from the likes of a Qualcomm, in being able to provide a standard platform for you guys, for other partners, for other application providers to build AI-driven applications on top of, which are going to drive some of this demand that we've been talking about here?
I think you need all of it, right? I think that no matter how much gets built, we are still going to be in this world of compute scarcity. And every time there's a new compute platform, new availability of this kind of computational power, that it's possible to design new algorithms, new methods, new models, new products that are able to deliver benefits to everyone. And so you should expect that you'll see this whole ecosystem of models from us and from everyone else that is able to take advantage of what's out there. It's a little bit like when the App Store first came out. Suddenly people started creating apps and filling that platform because there was this new availability, this new way of building. And I think we're heading towards a platform shift that's going to be much more significant than anything in history.
Another potential either roadblock or opportunity is talent, right? You got to have the right people to build this stuff, to design this stuff, et cetera. Immigration is a part of that. Jensen, there have been some moves, some announcements over the past few days about that. How does that position the U.S., maybe the H-1B issue and the extra charge on top of that? How does that position the U.S. in terms of competitiveness? What are your thoughts on where we need to go?
We want all the brightest minds to come to the United States. And remember, immigration is the foundation of the American dream. And we represent the American dream. And so I think immigration is really important to our company, and it's really important to our nation's future. And I'm glad to see President Trump making the moves he's making.
What kind of policy needs do we have from your perspective at OpenAI?
We need to get the smartest people in the country, and streamlining that process and also sort of aligning financial incentives seems good to me.
How far are we from yet another big announcement, right, about the capital needs and how you hope to fulfill those?
You should expect a lot from us in the coming months. There are three things that OpenAI has to do well. We've got to do great AI research. We have to build these products that people really want to use. And we have to figure out how to do this unprecedented infrastructure challenge and build out, which there's chips, there's power, there's buildings, there's a lot of pieces that go into that. And that latter category is going to be my big focus in the coming month. And we have very ambitious goals, so we'll have a lot to say.
Jensen, the next big catalyst that you see on the horizon? I mean, AI is what's driving so much of the market and the imagination right now of economies across the world.
Look, we saw in the last 5-10 years, AI move from generative to reasoning to now thinking models. Went from text to multimodal. It is very clear that there will be a persistent AI connected to every device to be everything that's out there. You know, it could be a persistent AI connected to the car, connected to smart glasses, connected to the phone, as you mentioned, connected to human or robots, and robots of all different sizes and shapes. And all of that is just beginning. None of it exists today, and yet everything's around the corner. That's how exciting this is. Yep. We're literally going to connect intelligence to every application, to every use case, to every device, and we're just at the beginning of that. That's the reason why we need such gigantic infrastructure, and this is the first 10 gigawatts. I assure you of that.
Well, I'm looking at the CNBC app, and there's Nvidia stock right now. We can't see OpenAI stock yet, but call me when we can. Scott and the halftime crew, back to you on this breaking news from Nvidia headquarters here in Santa Clara.
Yeah, John, really extraordinary, the announcement and what we just heard from those three men gathered with you there. John Fort at Nvidia headquarters today. Thank you very much for that. You saw Nvidia shares are at the highs of the day. Let's hear from the Nvidia shareholder, certainly one of them first. And Bryn, my apologies, we haven't even heard from you yet. And you just barely started when we had to go to John, but you're a long-standing Nvidia shareholder. You heard what Jensen had to say. What do you think?
We are definitely in a moment of time, a very special moment of time. We'll see how this plays out. So, just pragmatically, Nvidia invests $100 billion in OpenAI, which then OpenAI turns back and gives it back to Nvidia. So I feel like this is going to be very virtuous for Jensen. When I think about 10 gigawatts, if you think about that in electricity terms, that would be enough to power, I think, about a 8 million person home city. So if you think about the constraints, if I just think about the electricity constraints, when the majority of our grid was built 50 to 60 years ago, I think realistically this probably takes 5 to 6 years to actually play out. So it's very bullish. But I'm just saying pragmatically, the electricity side of this is a little bit of a head scratcher on how we're going to affect that. So once again, very bullish. If you don't know how to play it, you can just buy the Qs because you basically hit all of the names in the top 10 holdings of the Qs. And I just think it's a moment in time that we'll all look back on.
But Bryn, there are many, many ways you can play it, and you really can play it, excuse me, outside the Qs.
Yeah, I mean, there's so many names to play it. I mean, you can look at Palo Alto. I mean, I own Bug. You can look at Palo Alto, CrowdStrike, Fortinet. With AI also, I mean, you have Dell, you have Oracle. I mean, there's just really an interesting time right now. Plus, don't forget, we have all these IPOs coming that I'm sure will have more AI, more cybersecurity IPOs down the pike coming, shortly. So once again, as I said earlier, we are in this special moment in time. I agree with, I don't know if it was you or Joe that said it's not 99. It does feel like, to what your point, 96. And one more thing on margins. In the late 90s, the net margins on the S&P were about 5.5. Today, net margins are 10.5. So while we're at peak valuations, margins have doubled because of the type of companies and the construct of the S&P 500.
All right, let's talk about this move from Bryn Talkington. Bryn, you trimmed some IonQ once again. You bought it first on May the 19th. You sold half on May 22nd. It's up 79% in a month. Of course, we're talking quantum computing, staying on the theme of what we've been discussing. The CEO is on Mad Money with Jim Cramer tonight. Tell us why you trimmed it again. Is it just simply, wow, up a lot? Need to get out of here a little bit?
Yeah, I think Joe would like it if you showed a 1 month chart. I think I'm going to get a nosebleed if it goes any higher. It's just gone completely vertical over the last 1 month. And so once again, this is a flyer. I've never been shy about owning some VC type companies that you can buy in the public market. But once again, they're going to do probably $170 million next year for 2026, and it has over a $20 billion market cap. So it's a young company, it's an old company, but I'm here to make money, and so when it's up this much, I'm just going to take profits, and I'll wait. When it comes back down, I'm sure I'll get right back into it.
Yeah, all right. I know Al Michaels is listening intently to what you're saying here. I know that for a fact, and he's a shareholder now because of you. So we'll see what he does from here. Another all-time high today for gold. A record breakout drawing big interest in the ETF market, as you might expect. Dom Chu is following that in today's ETF Edge. Domino.
All right, so Scott, alternative assets becoming a lot more popular in recent years, but now that the Fed has more or less laid out a rate path, how are all of these alts and the ETFs that track them changing? Joining me now is Paisley Nardini, Managing Director and Head of Multi-Asset Solutions at Simplify Funds. Scott mentioned gold. Is gold one of those alternative type assets that is, in your mind, either over or under owned at this point?
To hit the question directly on, I would say gold is under allocated to right now. A recent fund manager survey came out, and majority of allocators have less than 5% in their portfolios to gold. We're starting to see some of those tailwinds. Gold has obviously done tremendously well this year for a couple reasons: uncertainty in markets, and questioning around, is it becoming the new ballast in the portfolio? And so as an alternative, as we think about in relation to bonds, I think gold is starting to become a bigger part of investor portfolios.
And you specialize in that alternative asset type structure and those types of investments. Where else do you see investors flocking a little bit more to in terms of that alternative structure?
So same underlying premise as to why alternatives are becoming a bigger part of portfolios is the need to diversify from bond risk. Bond volatility has actually been quite low the last few months. I think with the rate cut that we saw last week and expectations for the back half of the year, bonds could start to see volatility pick up. Other parts of the portfolio that are getting some of those traction and flows trend following, long short type strategies, currencies. All of these are various ways that investors can think about diversifying beyond their bond exposure and potentially hedging equity risk.
And some of those commodity trading advisor or CTA type strategies out there.
There it is. It's Nvidia, up 4% on that extraordinary announcement on this network at the top of our hour today with John Fort and Jensen Huang, certainly Sam Altman there as well. That Nvidia is making a $100 billion investment into OpenAI, and Nvidia hitting a new all-time intraday high on the back of that announcement today. We'll follow it, of course, throughout the remainder of this day and beyond. We'll do final trades right now. Bryn Talkington, yours is what?
BMNR, take advantage of the volatility. You can buy it today, then sell the November 80 calls and get $6.10.
Thank you, Sarat.
Intuit just affirmed and confirmed their expectations for earnings growth.
Stephanie Link.
Coinbase, I like the exchanges for crypto.
The Joe T.
Uber, new intraday all-time high, more to come.
All right, we'll see you on the bell in a little bit. The exchange begins right now.
Hello, welcome to Blue Cloud Trading. I'm George. It's Monday, September 22nd. It's after the close. It's actually currently 6:20 p.m. as I'm recording this video. We just saw some clips from the halftime report earlier today. And here's what we're going to do, folks. First of all, we're going to take a look at the indices to see how they performed today, the markets. And then we're going to take a look at a number of ETFs like the SPY, the QQQ, the Dow, the Russell 2000, the Euro stocks. We'll take a look at about 9 of the stocks and ETFs that were discussed on today's episode. I'll be reviewing those stocks, and we're going to look at the technicals of those specific stocks. Then I'll take a look at some of the Mag 7 stocks like Apple, Meta, and Tesla. And we'll also take a look at some requests from our members down here that you see. Okay, so first thing we're going to do is take a look and see how the markets perform, like I said. And as you can see here, the Dow was up 0.14%. It actually gapped down in the morning. And then it kind of basically around, I don't know, maybe around, close to 10 a.m. it started to pop up. And it was up 0.14%. NASDAQ pretty much steadily moving up 0.7% today. S&P 500, okay, that also gapped down in the morning, but then it was up 0.44% by the end of the day. And the Russell 2000 too. So there's a little scare in the morning because you saw the price gapping under the prior day's close, which was on Friday, but it was up 0.58%. So NASDAQ was up the most today. Let's take a look at the heat map. This is where we can take a look and see how the individual stocks in the S&P 500 performed. And you can see Nvidia is up almost 4%, 3.93% today closed. Apple closed 4.31% up. All right, Oracle was up 6.31%. Broadcom, Google, Meta, Amazon down. Tesla was up 1.91%. And the consumer defensives like Procter & Gamble didn't do so well, and Costco, but Walmart was up a little bit. Anyway, let's also look at the groups. Now, the groups here are the sectors, the individual sectors for the day, and you'll see that technology obviously was up the most, 1.76%, since NASDAQ was up the most, followed by utilities and basic materials and industrials. And then the worst, or, the sectors that were down, consumer cyclical, communication services, and consumer defensive. All right, now, oh, by the way, guys, I did put out another members-only video this weekend, so you may want to check that out to get access to that. Here it is. You could see that 2 days ago. I go over my entire portfolio, and I also share 20 new stock ideas. In fact, I added a bunch of those. I added, I think, 4 stocks today from that list. So you may want to check out this video here. To access this video, you do need to become a member, which is a little slightly different than just subscribing. If you subscribe, that's great. My videos will pop up in your subscriptions. But if you want to get access to this video, it's about almost 50 minutes long. You click the join button here. This little box will pop up here, and these are the 3 different levels. And what you want to do is just select either Blue Cloud Trader or Blue Cloud Legend. Okay, you can help support the channel by becoming a Blue Cloud supporter. So what you need to do is make sure that you click on the right one. Okay, so one of these 2. If you want to get access to the daily trade updates that I do each day, become a Blue Cloud Legend level member. If you want to get all the trades at the end of the week, Blue Cloud Trader. Okay, I'll basically summarize all the trades at the end of the week. You can get that information. Okay, under Blue Cloud Trader, let's get into these stocks now. And we're going to start off like we always do with the indices. We're going to do the top-down sort of approach here. We're going to look at the S&P 500, and we're using the Ichimoku indicator. Here it is. We've got the faster moving average at the top. The green line is Tenkan-sen. Kijun-sen is the 26. The cloud itself, here it is. You can see it projecting into the future. That's the Senkou Span A and Senkou Span B. It's all in the correct order. And then we've got the Chikou Span, that white line, which is actually the closing price in a line form, projected 26 periods into the past. So we can see where today's closing price is in relation to the candle 26 periods ago. If that white line is above the candle 26 periods ago, that's very bullish. We also want the price, these Japanese candlesticks, to be above both of these moving averages and the Ichimoku cloud. It's that simple. And Ichimoku stands for at a glance. And as you'll see in a few moments, when we look at some of the other stocks that are not doing so well, that's generally because they're not, obviously above the moving averages, above the cloud, and maybe they're the time frame you have to look at also is, okay, I typically look at both the weekly and the daily. And if we look at the weekly chart, that's also very strong, okay? Strong uptrend for the weekly and the daily. We are in a bull market. There's no denying it. The stock market's doing well. Here's the QQQ ETF, also up 0.48%. You can see that also looks very bullish. We've got the directional movement index down below here. This green line, when it's above the red line, that's bullish, especially when the white line is moving up, because that represents momentum is increasing, okay? And like I said before, if price gets under the cloud like it did back here, back in February 2025, you can see how that led to a drop of about, let's see, how big of a drop was that back then? Probably about 20% in just 1.6 months. So that's why we want to avoid stocks or ETFs that are under the cloud or inside the cloud or under these moving averages, waiting for the perfect optimal entry point. And that's what this does. It helps us identify that. So here's the Dow Jones. All right, also looking very strong. We can see we broke that resistance level right there. We're staying above it. It's still moving up, 0.16% up today. Russell 2000 is in a steady uptrend as well. Here's the 244 level. Why is this colored purple? It's basically a monthly level. So let me switch it to a monthly chart so you can see what I'm talking about. Okay, so here we are. You can see the years down below here, 2020, 2021, 2022. Here are the price levels. Now, back here on this candle, which was from November 30th of 2021, that was the high. That was the high right there. That price had reached with the Russell, and then it dropped for multiple months and years. You can see here we were going sideways for a couple of years, and then we started to recover. Price kept on finding support at that 161.94 level. Okay, 3 times in a row. That's a triple bottom basically, and then it popped, and then it came up to that same level at 244.98 level. And dropped. And now, guess what? We're retesting it. If this candle today, actually closes this month, for the month of September, above that 244.98, that's going to be huge. We'll be hitting all-time. We'll actually have closed on the monthly chart above that level, and then my, expectation going forward is going to be extremely bullish for the Russell 2000. So we're obviously moving in the right direction here. Here's the weekly chart. You can see how it's stalling here now for a couple of weeks. So this might be the week where it gets through. Here's the daily chart. You can see what happened here briefly on Friday last week. On September 19th, I talked about how it basically gapped up a little bit and then dropped right back under that level. So it's found support over here at the Tenkan-sen, the 9-period level. And so, again, we got to wait and see what happens here with the Russell. FEZ is the Euro Stocks ETF. Look at this one too. This is an interesting one because it's obviously also finding some resistance at 61.50. All right, keeps hitting its head at that level. In fact, today it basically closed at the exact same price that it closed at on Friday. So the closing price on Friday was 61.29. Today, 61.29. Interesting. The VIX, which represents volatility in the markets, was up actually 4.21%. Generally speaking, you don't see the indices moving up when the VIX is also moving up. But, we're still in really steady levels here with the VIX. We're under like 20 basically, and so like generally speaking, that's what we want. We want to be under the 20 level. We're currently under the Ichimoku cloud here on the daily chart. This is good. We don't want to be above when it comes to the VIX. We want the inverse reaction. All right, let's keep going here. We're going to take a look at the same stocks talked about on the show now. So here we have SMH, one of the ETFs. It's the semiconductor ETF, SMH, and here it is on the daily chart. Very, very bullish today. It was up 2.05%, okay, mainly because of Nvidia, I'm guessing, and yeah, it basically broke through this consolidation stage right here. All right, that happened on this little candle. When was that? That was around September 11th. And since then, it's up 5.8%. VRT, Vertiv Holdings, is another stock they talked about. It's in the technology sector. It's coming close to 155.84. This level goes back to this point right here. Let me switch it to a weekly chart so you can see what I'm talking about. You can see that candle right there. That's from January 24th, 2025. Okay. We came back again to that level here. It's interesting how history repeats itself and drops. Now we're going to retest it again. And if we can get above that 155.84, Vertiv should take off as well. I like what I'm seeing down below here with the ADX moving up. You're seeing the momentum increasing while the positive DI is moving up and negative DI is moving down. I've got it at a setting of 9, by the way, which is not the typical setting. It's a little faster. PANW, okay, also coming right to a level of resistance and stalling, right? In fact, it closed, again, this too closed at the exact same price that it closed in on Friday. So Friday's price close was 208.18. Same thing today. Interesting, right? Yeah, that's really interesting how it just stalled right there. But again, that's the level I'd be watching. The 210, it's called 210.39 is where that level is. It's based on this high right here from that candle. IONQ is the ticker symbol for IonQ Inc., technology sector. And this was up 2.17%. This one, as you can see, here's a perfect example of what can happen when price finally breaks through. Okay, so there's a resistance level from that candle, the 54.74. Okay, here it was breaking through. Boom. How much did that move? Well, let's take a look. Let's measure that. 29% in just 3 weeks. Sorry. So that week where it broke through was back on September 12th. And since then, it moved up that much. Now, if we switch it to a daily chart, you can see that big breakout there. Here's the candle. I'll circle it for you guys right there. It's a shooting star. So let me zoom in on it for a second. There it is, okay? So that's a reversal candle. Reaches that level and drops and then moves sideways for a bit. So that's really interesting. And here we are breaking through it. This happened on Friday, September 12th. Okay, not last week, but the week out before. And boom, it's still moving up. Now, a stock like this is, you are taking a little bit of a risk. The beta is 3.24, so it's very volatile. All right. And when price gets kind of far away from the moving averages, it's now considered extended at these levels. All right. This would be your equilibrium zone, in my opinion. And so it's more than likely to pull back relatively soon. It's not going to go straight up. I don't expect it to. Generally, stocks, they start to lose some steam after a little bit. So we'll see what happens with that one. FTNT is Fortinet Inc. Here we are on the daily chart. We're under the Ichimoku cloud. So you'll notice that I have these 4 stocks here. I've got a little blue flag. Okay, that's because those were the most bullish of the bunch of the 9 stocks and ETFs that I'm discussing right now. It's just these 4 that I would personally consider adding a position in. Okay, I would consider it. I would not consider it in the ones that I'm about to talk about, like FTNT, Fortinet. And why is that? Because it's currently under, as you can see here, under the 200-day moving average. That's that dotted yellow line right there. It's under the cloud. It got under the moving averages right about there. You can see that candle. So like if we measure, again, let's measure that move from that point. Just holding it down. to the low. Let's go to the low first and find out. That's a 33% drop in 9 days, folks, 9 days. So let's go back here. July 29th. And this here was August 7th. Okay. In 9 days, it dropped, pretty much like around 33% or so, somewhere around that. Now, the good news is it has started to move up. It's now down just 18.76% in 1.8 months. And it's showing some strength. There's no question about it. We had that bullish candle right there, the bullish hammer that led to this move. Now, it's going to find resistance though. So right here at the cloud, we've got one positive thing. The Tenkan, the 9 period crossed above the red line. That's good. So that's bullish. But we've got a lot of resistance above, so it's not really ideal time to get in. And if you look at the weekly chart too, see how we're also stalling at the weekly cloud? All right, so not good. Remember earlier I was talking about how the white line, the Chiku span, if it's under price, that's bearish, right? And if you look at the cloud itself, that's also the future cloud is bearish too, because the Senko span A, the light colored blue line there, is under the purple line, the Senko span B. You get the negative DI above positive DI. That's also negative, all right? So we'll see what happens with this one. Here's CTA. Here's another one that's not that great. On the weekly chart, it's inside the cloud. So it's a little stronger than the FTNT, but it's inside the cloud here. Simplified Managed Futures Strategy ETF. Chiku span is under price. Here it is on the daily chart. Looking a little more bullish. But, like I said, it's under the 200-day here. The cloud is starting to turn a little bullish. It might turn into something, but you're taking a big chance there. BMNR is BitMine Immersion Technologies, Inc. This was, Tom Lee was appointed as chairman of BitMine Immersion on June 30th. This one is inside the cloud right now in the daily chart. I would hold off on this one. And here it is on the weekly chart, under the Kijinsen, the 26 period. Into it. Okay, on the weekly chart, under the 9 period moving average. But overall looks better than some of those other stocks like I mentioned earlier. Here it is on the daily under the Ichimoku cloud. So I'd hold off on this one too. Into it. All right, and then Coinbase is the last one here. Coinbase Global Inc. is under the Ichimoku cloud. It's basically on the daily chart, so no on that one, and on the weekly chart under the 9 period, so I'd stay out of it. So you can see how quickly you can, Ichimoku again stands for at a glance, so we can quickly assess the strength of the trend. And when price is under any of these moving averages, that's not good. Not a stock I would consider adding a new position to. Like if you have a position in any of these, you can certainly start to try to manage these stocks based on, whatever criteria you just determine for yourself. Like I have different rules, so everyone's got different rules about holding positions. And so, yeah, but that's how I would play it basically. All right, so let's look at some of the Mag 7s like Apple. By the way, folks, the reason I'm not covering Nvidia today is because I did add it to the portfolio, the Blue Cloud Trading portfolio. So I will be sharing that information with members in upcoming member videos. All right, Apple. Let's look at Apple for a moment. Apple had a big day today. It was up 4.31%. It got a blue flag today. Apple got a blue flag today. Why? Because in the weekly chart, this was the first week where, after that gap up, the Senko span A crossed above the Senko span B. You can see that right there. Okay. So that's very bullish. The Chiku span over here, the white line, is above the candles on the weekly. Price is coming close now to 260.10. All right. You can see that resistance level right there. It's not that far away from that resistance level. It's about 1.94% away. All right. And yeah, so that's Apple for you. Okay, here's the daily chart. Here's Meta pulling back today under the Tenkan in the 9 period. So it dropped 1.7%. No particular reason. You never know how stocks react to different things, but Meta today was down a little bit. Overall, it's still a very strong uptrend. All right, we're still above the cloud on the daily. If we look at the weekly chart, we're still very strong, and it's still in a strong uptrend on the weekly. Okay. Tesla also had a bullish day today. It was up 1.91%. So here's the weekly chart. You can see that this week, the Senko span A is still, the light colored blue line is still under the purple line, okay? So that hasn't turned bullish quite yet, but all the other elements are bullish on the weekly chart. You can see this Chiku span here is above price. Price is above the moving averages, but look how far away, again, we are. I think we're kind of extended up here. Today, on the weekly chart, it looks like it's building almost like a shooting star type candle. Here is the daily chart. It, in fact, did create a shooting star on the daily for Monday, September 22nd. Be very careful of these candles. These can be really, really bearish. I'll show you guys a quick little cheat sheet that I like to use. The candlestick cheat sheet. And by the way, you can get access to this, guys, on my Twitter page. I'll share how you can do that in a second. So if you look under bearish single candle patterns, there's the shooting star. Long wick, small red body after a move up. If you see that, is a higher probability that price will drop. No guarantees though, okay? Just a higher probability. You get a little bit a higher edge as far as making your decision about whether you want to hold up position or not here. Now this one is not even red. It's a bullish candle. It was up, like I said, 1.91%. But what does this wick, the long wick at the top, signify? It signifies selling. So here's the 5-minute chart. I'm just switching it over so you can see what transpired today. Here we are on the 22nd, okay? And if you look closely here, right here, price gapped up this morning, okay? Gapped up to this level and then it moved up about 3.3%. But once it reached this level of 445 or so, it dropped. It actually dropped quite a bit. It dropped about 3.33% down to basically back to the opening price. See that green line there? That's the opening price right there. Came right back, in fact, even slightly under it. And then it started to come back right back up again, just a little bit, which is that's why it's up only 1.91%. But this is not a very bullish scenario here because it's telling us, okay, there was like some excitement. And then I think what happened was there was a lot of profit taking that took place right in this area here. Okay. And so just be careful. That's the idea with these shooting stars. They can be pretty dangerous tomorrow, maybe, potentially. Who knows? We'll see. All right. Let's see. Next one we're going to look at is we're going to look at the members' requests here. BE, Bloom Energy. Okay. Here's a stock that is really on fire. Okay. Now, actually, this is a daily chart. Do you see this 19.5% profit? That was in one day. So price, this is a very volatile. See the beta, 4.04? So I got in on this stock here on September 9th, right? Got out on September 10th. It literally moved up 19.5%. I got out. These types of stocks scare me a little bit. I'm not going to lie. They can be very profitable. In fact, from this level, if I was just measuring from here to the highs up here, that's a 56.8% move that it's made in just 13 days. Very volatile. Yes, you can make some crazy money with a stock like this. In fact, when it got above the Ichimoku cloud all the way down back over here, we got to go back in time a little bit, back to June of this year. Let's go ahead and measure that. So if I just hover my little mouse right there, and you can see it's moved up 281.58% since June. So BE, Bloom Energy, it's a stock that's on fire, but with all stocks that move up like this, when it does finally break down, the next level of support is the 9 period, the Tenkan. If I just hover, you can see it's almost 17% away from its next support level. Okay, so just be cautious with these types of stocks. And here's the weekly chart. It's like I said, it's been on fire for since June. And prior to that, it was in a steady decline. If we go back to 2021, you can see that right there. It was in a steady decline, and it was in this downward trend. And then finally what happened was price started to basically move up here. And now it's kind of going parabolic, basically. And so parabolic moves, they can be exciting, but they can also be extremely dangerous once the thing falls apart. Because nothing goes up straight forever. It's like a rocket, just moving straight up. All right, let's go to CVS next. Here's CVS on the weekly chart. CVS Health Corporation. Now it has stalled on a weekly 200-day moving average. You can see that right there. The last time it came to it, over here, it pulled back. Came back to it there and pulled back. Right now, it's retesting the 200. And last week, we got that reversal candle. It's called the doji. See that? It's when the opening and closing price. Okay, so Monday's price was around the same price as the closing price on Friday. That's what that means essentially. Okay, so things are looking a little bit more bullish today, up 0.28%. Let's look at the daily chart. The daily chart does look bullish, but I'm just letting you guys know that the 200-day is a very strong level of resistance. Okay, so you have to be very, very cautious with it. Here's the daily chart. Okay, so am I bullish on CVS? I think I would be more bullish once it breaks through that 200-day, personally. I'd want to wait to see if it can do that on a weekly candle. Personally, I would wait until Friday. If I was, going to plan on adding a position, I'd wait until Friday to see, will it close above 200? If it doesn't, then I would hold off, basically. There are other opportunities out there that look better. All right, the next one is Astera Labs. Here's the weekly chart. This one's down 3.22%. Let me show you guys. So I had a position here with this one as well, Astera Labs. These are requests from our members. I'm guessing that some of them are still holding some of these positions. So I added this one back on September 4th. September 4th, it came up on the Blue Cloud scanner, got out up here on this candle for a 30.1% move. So again, even though the beta says 1.61%, some of these stocks, they can be pretty volatile and they can move quite a bit. And that was a very short period of time. If you think about it, that's 1, 2, 3, 4, 5, 6, 7 days. In 7 trading days, it was up 30.1%. Now, here's the thing. It did actually move up slightly, but now it's coming right back to around the same area where I got out. And right now it's looking more bearish because price is under the Tengen-sen, the 9 period. It closed under it today. So, if you're in profits, it's up to you, of course. Everyone's got to make their own decisions about entries and exits. But personally, I would be taking profits because it is a very volatile stock. The next, your next level of support is going to be down here, the Kijinsen. That's about an 11.5% drop. So you'd be, potentially giving up that much. Now we are getting some reversal candles here, so that after this little pullback, so it could certainly pop again. Nobody can predict the market. All right, guys. Sorry, that's going to do it for this video. Real briefly, if you guys like the software, I also forgot to mention the cheating sheet here, the candle pattern reference sheet that I like to use. How can you get access to this? Well, all you need to do is go to Blue Cloud Trading. Right next to the join button here, the join link, click on 8 more links. You can read a little bit about my channel, scroll down. There's a bunch of links here if you want to check them out. Here's my Twitter page, okay? So you click on, and by the way, if you like the trading software that I use, you can get a $25 coupon by using this link, all right? For TC2000. That's the trading software that I use. All right, so here's my X page. Let's click on that. Let's go to it real quick, and I'll show you how to get access to that candlestick patterns reference sheet. So scroll down a little bit, and under highlights, there's a multiple, there's like 6 tabs here. Click highlights, scroll down a little bit until you see this. And there it is, okay? There's also a stocks patterns cheat sheet that you can also download from here, all right? All right, guys, that's going to do it for this video. Thanks for watching. Hope you all had a great day and a great weekend. I will catch you all in the next video.